Investors and traders, welcome to the channel. Market chart pattern. Today is 16th of March 2025. Hope everyone is having a fantastic weekend. We will be taking a look at the key markets, and in this video segment, which is the second part of and the last part of the stock market program that we take a look at for you guys. We'll take a look at the key US stock market indices and also global indices as well. So let's start with the global ones first, and then we'll take a deep dive into the US stock indices. All right, so let's take a look at the German DAX first. So here we go. This is the daily chart of German DAX, and the German DAX actually reached our objective of about 23,100. And then it tried to get above it but failed, and it's just in a range bound situation right here. Momentum still remains pretty good, although it is really hanging about really key levels. Getting below this swing lows here, it could have a pullback, but the important thing is it did complete this level, so any sort of pullback wouldn't be a surprise. But the question will become whether it is a pullback or whether it is more than a pullback. And thus far, it actually pulled back into what have been the previous pullbacks, like in this leg from here to here higher. So getting below the swing point will be a key indication that this market might be entering a bigger correction. So with this kind of strength, it is more likely a correction at this moment in time. And here we go. We can see that the European market has actually performed much better in comparison to the US market, which has been down about 10%. S&P 500, and these markets are actually standing pretty well. Here we go. This is the weekly chart. We have the CD leg right here completed, which is the 1.272 extension or times the AB leg. Now it is between this level and this level. So maybe this roughly 25,000 level, maybe around here we might see price action. What sort of further price action we get from here? So let's just wait and see. This is going all the way back to 2020. And then if you take a look at really long-term charts here, so I want to show you something really interesting here, what is happening. This is the monthly chart of the German DAX, and I want to point out to this region right here. This is going back all the way about 25 years ago, beginning of the millennium, the new one. And then what we got was a market which became parabolic. And peaked in April of 2000, and then retraced. Like this looks like a more like a 78% retracement, which it did over the course of next couple of years. And what are we looking at right now? So we have got a situation where it does indeed look like a parabolic situation, quite similar to what we had right here. And we do have the 1.618 extension, so where the CD leg is 1.618 times of the AB leg, going back to the excuse me, the lows of 2009, March 2009. So maybe there's a possibility to try to attempt the 25,000 psychological level, but look at this parabola, which kind of started in August of 2024, and it still seems to be going pretty strong. So we are actually, getting into this parabolic situation. 25,000 key psychological level. We'll have completed this big ABCD right here, and then this one I have not used right from here, but we can also use this one. But the point is, we are in this ballpark figure, and this market is getting parabolic. So that's an important observation to make. Now let's take a look at the UK market. This is the FTSE 100. This one is at the 1.272 expansion of this entire range. This is where the COVID lows came about. This is obviously the longer term monthly chart, and this market is actually consolidating right here. It does look like maybe it is poised for a pullback as well, and we'll just keep on watching this wedge formation right here, getting below this, breaking this low. One of the things about the wedge formation is, and the triangles, when the breakout happens, it is a pretty strong breakout. Now let's take a look at this on the weekly chart. We can see the couple of weeks still stronger than the US markets. It broke above this consolidation of several months, and then it had a nice expansion right here, and I'll show you what that expansion is on the daily chart. Here we go. So it went right to the 1.618 times these entire. Basically, this is the trading range that we looked at. This is high, this is low, and it went right to the 1.618 expansion of it. It pulled back a little bit, then it did another 1.272 expansion of this, and now it's just pulled back quite a bit, broke below this this low. So this is an interesting one because it does look like it is getting ready to actually pull to the downside, and once it breaks below these swing points, then I think it could actually move lower pretty quickly as well. So this is the way it looks like. It looks like it is in early stages of formation of an Eiffel Tower kind of a pattern formation, or we could get a stage like this. FTSE moves like this, it goes into a long consolidation. Something like this can also happen, but if we begin to actually decelerate down, it could be coming down towards the bottom of this trending range. Now let's move to the US stock market. So we start by taking a look at the NASDAQ cash market. This is the NDX, NASDAQ 100 cash daily chart. And last weekend we did an analysis in which we took a look at some of the historic scenarios where the market has actually closed below for the first time in a long time, below the 200-day moving average. And then we looked at, okay, over the course of next 10 trading days, if the market actually exceeded more than declining more than 4%, and then we have historically seen a bigger decline. So this is the Monday price action, and this is something I was surprised a little bit, because the way on Friday, the way the market had closed, and we had some pretty good support levels as well, they were broken to the downside. So this did come as a surprise to me, but then what we have also seen is that the market just began to consolidate over this period, last week pretty much, but pretty big moves up and down. So I think there was consistent buying which is coming in, and a key level was held, and I'll speak more about it. So now it looks like we have an indication to us. So it does look like where the market is, and I'll show you in a bit by looking at different charts, that the market seems to be at a point where we are likely to get a rally, and it could be a pretty good rally. Now, one of the things based on the previous charts that we analyzed, I think it was in 1996 chart when this signal was triggered, but the market rallied, and rallied pretty nicely, and I think it was even able to get above the highs and get above to 1.272 times. So 23,000 is where on the cash index the 1.272 expansion will be. So we will be watching this rally really cautiously. I think the first point will be around 20,500, which is the 38.2% retracement. We'll look at the quality of the rally. I am viewing it as a bounce right now. Any rally into it, I will be more inclined towards perhaps a bear market rally. But of course, here we look at the price action really carefully, and if there are indications that it might be something which has got more firepower, then we'll view the price action accordingly. But right now, looking for at least a pretty good bounce. Market is really oversold, and one thing I would like to point out is that what the market has done, it has declined as much as the way it had declined in here we go, from July 11th to August 5th 2024. Also, where the market stopped was right at the 61.8% retracement of the August 5th lows. Now you can view, and I'll try to put a link to the video from the archive when the market was actually making this bottom right here. I had done a video in which I explained that the market was making a really key, possibly a bottom right here, because we had the time and price meeting. So whenever the price meets its time, the pattern is complete. So it was a completed pattern in time, and also we had key timing coming in, and also price wise. So it was hitting a really key support levels. But this one is a little bit different, because this was ABCD. There is just no ABCD right here. So there is a possibility that this just might be a first leg right here, rallies to the 38.2% retracement, depending upon the quality of the rally. It could go up to 50% as well, and then maybe it's going to be an ABCD to the downside, where we could see actually these lows from right here being challenged. So that possibility is also there. The other possibility is there is a pretty good rally, and we could actually see a lot of this being retraced, maybe even getting up to here. The probability of that happening in my books is a little bit lower, but then we have seen the 1996 chart from our video previously. So that possibility, we'll just watch all these scenarios really carefully. Now here we go. This is the weekly chart, and here we can see that right here market came right to the 61.8% retracement, slightly below this channel formation, and by the looks of it, maybe the market is finding good support right here, and we could see perhaps a rally, which I'm viewing it more as a bounce right now, but it could be something more than a bounce. Then we'll have to wait and see. The ABCD extended one, we still have this target outstanding around 23,200. So maybe the market actually makes an attempt towards this as well. We'll have to wait and see. But the signal that we have seen on the daily chart, I think we'll just view the price action in a very careful manner. Now let's take a look at this on the SPX. This is going to be the S&P 500 cash index. And here we have the 61.8% retracement come in as well. One of the things is that the decline thus far has been about 10%. Last time in this BC swing of this smaller ABC, this blue ABCD, it was also 10%. So we have seen these declines of 10%, and the market has rallied. So maybe it's also from a percentage pullback perspective, right at a point where we could anticipate it from the oversold conditions, at least a pretty good rally to start. That remains a possibility, and I think we'll find out early next week. Here we go. This is what the daily chart is looking like. We have some key Fibonacci ratios coming together as well. This market has completed, just like the NDX, the entire decline into the 5th of August 2024 as well. So really key levels. Getting below this, I think the market is dealing with something not something pleasant, and anything is possible in the markets right now. So this is what we are looking at in the S&P 500. Now let's take a look at the Dow Jones Cash Index. And let me actually go and move on to the weekly chart. On the weekly chart, this one also has got our timing model. This is something I should have mentioned at the beginning of the video. So we have the timing model coming around 31st of March 2025. But since it's a weekly model, we should give plus minus 2 weeks for this. And I think the timing has already started. Now, right into this timing zone, the market has actually pulled back into it. And one of the things about timings is that it's timing. It doesn't necessarily give us the direction, but we have caught really nice timing when the markets were making highs, or a retracement, a recovery retracement, and then we have seen the move down to the downside. We have also seen the reverse. Markets were pulling back, and the timing kicks in, and we have seen a decline being stopped and a rally starting. So we are in that region. So let's keep a note of this. So here it's also stopping right at the 61.8% retracement of the 5th of August low. So that's where we have seen the NASDAQ 100 cash market, the S&P 500 cash market, the Dow Jones cash market, also basically looking at 61.8% retracement. Well, now, one of the things about the bottoms of the 5th of August low, so one of the things about bottoms is they come in unison. So they kind of all these major indices, they are forming a bottom at the same time. All the major ones that I have looked at over the course of at least last 5 years, they have come in pretty much at the same time. So this is one of the things about the bottom, they come in unison. Now the tops, they are formed gradually. It's also a little bit difficult at times because different markets are in different phases of their cycles, so they can form at different times. But what we have seen is a really key level being held of 61.8% retracement in this the major indices. So this is why it's really important. We might have seen a pretty good point from where the market could rally last Friday. Now, where it's a little bit different is in the Russell 2000. This is the cash index, and here it has actually gone, or it actually took a stab at the lows of August 5th, 2024, but closed higher, but still negative on the weekly basis. A really, what shall I say, a weak looking chart here. But then last Friday, we saw a nice bounce as well from really oversold conditions. Now what we're going to do is we're also going to take a look at this on the futures chart, and I'll show you that even the future markets are doing the same thing. So this is the NASDAQ 100 daily chart, and 61.8% retracement of the 5th of August lows right here. If we move to the weekly chart, a little bit easier to see. That's the retracement, and then it broke below this wedge formation right here, and then chances are it's going to get back into it. And of course, we're going to watch the quality of the rally, at least looking for a bounce, which could be 38.2% retracement of this entire decline. And then, if the rally is strong, maybe it's also able to get to new highs as well. So we will actually use our example of 1996 when the signal was triggered, but the market was actually able to make another rally higher. It was kind of a suckers rally back then. So this is really interesting. And then if we just take a look at the S&P 500 futures market, this is also going to be the, I believe it is the 61.8% retracement. I already have this, so let me actually bring that ratio in. Here we go, right to the spot. So there we go. Future markets are also making this 61.8% retracement, and we also have the symmetry in terms of the decline in magnitude, also percentage wise in the S&P 500 cash. So we have a confluence of number of things coming together. And also last Friday there was a key astro aspect as well, but we don't discuss astro because I don't understand it too much, but there are a few aspects that I do pay some attention to. So we did have a lunar eclipse, a full moon lunar eclipse, and some people view it as a negative aspect, but the market actually closed higher. So looks like there's these key levels, the cycle date that is coming in. Maybe the market is being held up, so that is another point to pay attention to. All right, so we have looked at all these key markets. Let's take a look at the New York Stock Exchange Composite Index as well. So going back to the 5th of August, a low right here. Let's see what sort of a retracement it has done from here. And it seems to have done a little between 50% and 61.8% retracement, but closed above the 50%. So really interesting the way the market has actually been performing. It does look like it was an ABCD right here, or very close to it. Here we go, and we just put it right here. Yep, there we go. So it came right at the ABC, a little bit higher than that. So we have a number of these things. So this is really interesting with the market is, so just to conclude everything, we were looking at a key trigger last week where the NASDAQ 100 cash market, if it closes below the 200-day moving average for the first time in a long time, like a year for example, and in the next 10 trading days, if it closes below 4%, then we have seen bigger declines happen. However, we have also seen that before a bigger decline happened, the market actually rallied, and also in some of the charts that I've also described them as suckers rally. And in some cases, it has actually gone and made newer highs as well. And then we have seen the markets actually roll over. So whether that sort of scenario plays out, I do not know. What we do know is that last Friday, these key major indices in the US that we follow, they were making 61.8% retracement of the 5th of August lows. We have seen this in the NASDAQ 100 cash, NASDAQ 100 futures, S&P 500 cash, S&P 500 futures, and also the declines are in terms of percentage, also in terms of the magnitude. In the S&P 500, they are equal to what we saw back in August of 2024. So with number of these key aspects coming in, the ratios and the key retracement levels thus far being held last Friday, as long as those are held, I think we have got a pretty good chance of a pretty good rally coming into the markets early next week sometime, and we'll be watching the quality of the rally really carefully, and at least that is going to be some sort of a bounce, and I would expect the market to retrace about 38.2% of the entire decline thus far from the highs to the lows seen last Thursday. And of course, I will keep you guys updated with the new developments into the market. We'll be watching these levels and the patterns really carefully, and we'll bring it out to you guys. So thank you very much for watching the video. Just one last request. I will actually be linking the donation link in the description. I highly appreciate if you are able to donate something to the channel. It will just help me cover some of the costs, such as the subscription for TradingView and some of the softwares, and also spend a lot of time analyzing these charts for you guys, and bring my research to you guys by making the videos, spending a lot of time. And the channel, of course, I'm not selling anything on it right now. I'm not monetized either, so it will really help me a lot. So I really appreciate that. And thank you. If you like the video, then please smash the like button, and if you want to subscribe to the channel, then please make sure you also hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. Thank you very much. Good luck, good trading, and speak to you guys soon.